So listen, what I normally do before we even get started is I like the folks that are participants, give them the floor to just tell us a little bit about who they are, what they do, what they're interested in. And then generally around 15 minutes after the hour, then we'll actually formally start. And I'll ask the panelists to introduce themselves and then make any opening statements that they want. Then I'll ask some questions and then open it up to the floor. So while we're doing that, a couple things. For those of you guys who are joining now, if you guys don't mind putting your name, information, and contact in the chat, and also tell us where you're from, like what city and state or what country you're from, because it's always nice to kind of get a geographic spread on the thing. So I wanted to open up, and then after that, I will invite Joshua, Jorg, and Senya. By the way, Senya, you're looking wonderful. You're looking fully recovered and not shaken anymore.
Welcome back, Senya.
Thank you very much, my friends. It was really bad, but I hope the best. So thank you, Jared, a lot.
Yeah, is it okay if I call you shaken, not stirred?
So this is my first webinar actually in 5 weeks. So I think that will be okay. So it was really
good.
Yeah.
So I'm gonna let you introduce yourself in a minute. So let me open the floor up. Is there anybody who would like to tell us a little bit about who they are, what they're doing, and maybe what they're interested in? And you can just unmute yourself.
Yeah, hi, this is Praveen here. I joined for the first time. I'm not sure if you, and good morning to all of you.
Good morning, Praveen.
Yeah, so I was basically interested in like if we are doing trading or something like that, and is it better to do it through some kind of LLC account, right? Like and then designate it as that, and but how do you do it? Because I'm doing it for the first time. So I have an LLC. So I've been trading on a personal account, and then I'm suspecting that I'll be hit with a lot higher taxes for gains or whatever it is, versus trying to do it through an LLC. I mean, is it true, first of all? So that's the question I have. And if so, like, how do I do it? Do I have to actually designate it that it goes into a bank account meant for the LLC? Because LLC was just like something that I wanted to start some business with, and then it's been doing nothing. It's been opened. And then there's no bank account or anything right now because I thought like, I didn't bother. So I guess that's the question.
Right. And Praveen, where are you calling from?
Texas.
Texas. All right.
All right, well, I'll address some of the, I'll address or touch upon that point.
Yeah. Anybody else want to introduce themselves and to just tell us a little bit about who you are, what you're doing, and potentially what you might be interested in?
Why don't you let people know the lineup? And then
jump in. Hello, my name is Katrina. I am based in Toronto, Canada. I'm actually part of the first team that launched the first Bitcoin fund that is listed on a stock exchange. That's the 3IQ. I'm independent now, actually, right from the start of the pandemic, and I am huge Bitcoin person. But recently, I am putting together a strategy that would involve a Bitcoin smart contract, kind of like incorporating RSK. So just wanted to know like why I'm here is, I'm trying to figure out the tax component of how it might be treated. It's nothing that I have already formed. I'm just like conceptualizing it right now. And, so thought that this might be a great space for me. So thank you.
Awesome. Hey, Russell, I see you're on. If you want to introduce yourself and tell a little bit about what you're doing, maybe a little bit about WAMPay.
Oh, sure. So my name is Russell Castanero. I'm currently the Director of Digital Transformation at the state of Colorado. And I got into Bitcoin about 5 years ago. I had a startup called WAMPay, which is still operating, but I'm not the president of it anymore, that allowed for non-custodial wallet transactions online and in person and at point of sale. And obviously, a lot of our customers had tax issues with Bitcoin. I think I was in a position not too different from you, actually, Gerard, where I was using Uphold as an exchange, and they had an algorithm system that you could subscribe to, and so I put $200 in to that, and it was doing automated trades, all the time. And then I got this, was it like 1099K, I think, that showed that I had like $87,000 worth of transactions because, it's basically the total number of trades in and out and transfers between the system. So I had to go through all sorts of hellish nightmares to get that to what should have been a reasonable number in the beginning. And anything I can do to learn and so that I can say things to the right to people to let them know how to avoid going through that sort of living hell is a great thing.
Yeah, well, that's such an important topic. Russell, I want to say about two things. One, we're launching a public-private partnership discussion on can governments actually use mining and ICO, STO concepts to generate revenue for public entities. So let me circle back around because there's all kinds of cool things in that might be interesting, worth talking. And secondly,
our commissioner of securities in Colorado is Tung Chan. She used to be the general counsel for Ethereum Foundation. So
excellent.
Colorado's a lot more interested in doing than many other states. So if you want, I can give you an introduction.
Yeah, that would
be
be awesome.
Denver too coming up.
If you go to the GBAglobal.org website under events, I think the event is February 9th. We're going to talk about public-private partnerships to raise money using mining and cryptocurrency concepts for governments. Mark, did you want to share something?
Yeah, absolutely. I'm Mark Wasser. I'm the CTO for the Government Blockchain Association. I am not a lawyer. However, I actually do have a lot of experience with a lot of cryptocurrency edge cases. When you start dealing with things like Steam or Hive, which are cryptocurrency blogging platforms, you actually end up in uncharted territory. Every single lawyer that I talked to had no idea how to deal with it. When I suggested how I was dealing with it, the answer generally was, yeah, that seems like the best idea. At worst, the IRS will, look at it and say, but you certainly won't be prosecuted for that because I have no idea how to do it better.
Yeah, and Mark hasn't shared yet, but GBA is also, we have our own token. It's the GBA rewards token and a utility token. And so I'm sure a lot of these tax implications are going to impact us. Plus, we're looking at how we're going to be paying chapter leaders and regional leads and working group leads. We're thinking about using the Lightning Network, but all the tax implications there. So there's a lot of things here that I know we're personally interested in. Anybody else want to share who they are, what they're doing, and potentially what they might be interested in?
I'll just say real quick. Hi, guys. My name is Morgan Muchnick, and I run my own small consulting practice focused on government public affairs with, innovative and disruptive technologists. And I have a couple different clients that I'm working with that are very interested in the automated compliance aspects to cryptocurrencies and the sort of accounting and tax issues that align with, modernizing and sort of bringing the cryptocurrency world to a more modern and sort of usable place. So there's a lot of very interesting rules and regulations that fall into the accounting space and tax accountability space that some of my clients are working with. And I'm hoping some of them will be on the call today because they are interested in sort of seeing where their technology and compliance software would fit in. Thanks, guys.
Cool. All right. Well, listen, I tell you what, it's about 10 minutes after the hour. So let's go ahead and have our speakers introduce themselves. So let's do Joshua, followed by Jorg, followed by Ksenia. Why don't you just do a brief introduction? I'm going to ask everybody else to voluntarily mute themselves. And if I do hear a lot of background noise, I may mute you, and you might have to ask to be unmuted. I'm not sure, but we do like to keep this thing highly interactive. So we'll have them introduce themselves first, just quick about their background. Then have them make an opening statement. And then after that, we'll just do question and answers, and we can go until until another hour and 50 minutes. And we'll stay as long as you guys want to talk. So Joshua, you want to go ahead and get started?
Sure. Thanks for having me, and thanks everyone for showing up. Josh here, in the Denver area, originally in New York City. And I've been in this, and I'll just jump right into it. I've been in this industry space since 2016. So not that long, and yet a lifetime, right? A week in crypto is like a month in real time. So it's totally dog years. And I say crypto, which is just a use case for blockchain tech. When I look at this organization, I haven't been involved previously. There's so many applications. Is it centralized, decentralized, private, public? Different kinds of permissioned networks. So I know this panel is to speak about a specific kind of topic regarding tax and crypto, and so I just don't want to. I'll always turn things to where my experience is and talk to what I know. So if I ever veer off, feel free to rein me back in. But I have a fractional CFO consulting firm with about 15 people. And back in 2016, we had a client called Bridge 21 that did Will Madden's CEO here in town, and they did cross-border payments facilitated by Bitcoin. So that was the first exposure. And then when Shapeshift, which is a crypto exchange, launched their closed their Series A, the investors asked me to go in and set up the books and do all the accounting and related. So I was their chief accounting officer for about a year and a half during the last rally cycle, 17, 18. Then after that, took about a year off during the bear market. And then in the last 16 months or so, I've been working with Binance.us, which is completely separate legal entity and not a subsidiary of Binance.com. So it shares the brand name, but it is not part of that company. So another exchange here in the US, but with fiat rails, so meaning, you can use USD. So my main role there is, audit, tax, treasury, money transmission licenses, and a whole host of other items. So that pretty much is what occupies my day, and involved with a couple of associations, Chamber of Digital Commerce and the Blockchain Association, and both work, in the Hill to advance legislation that makes sense. I can't say favorable because the things are shifting and evolving so rapidly. What is favorable? 1099K, 1099B, other elements of tax or regulatory environments there. So I get some, I'd say on the edge of what's going to happen, hopefully. But as I said, you go outside of the call, and I'm sorry I've taken a long time here, but the incoming administration things will shift. We just don't know how. So with that, I live and breathe this stuff, both personally, because from an investment perspective, but also professionally. So that said, I'll kick it on to the next person.
Hey, Jorg, thanks so much, Joshua. I'm really looking forward to some of these discussions we're going to have. Jorg, why don't you just introduce yourself really quick, and then we'll get into opening statements.
Ksenia.
Yes. I'm in the space from the very beginning of Bitcoin. So and I founded the Satoshi Consulting and Education in the early times. So I moved on with that, and we acquired a partnership with Infinity Law Tech Services. So we are not only educating in the technology and the meaning of DLT and blockchain and Bitcoin. Also, we have strong education in the law and the rules about all of that and how we can make that. And yeah, my proposal of all of that is someone must keep in the balance between the philosophy, which has gone away with the investors a little bit, and bring them back into the system. And on the other hand, keep the bridge open for regulations. So that's what I'm doing. And yeah, and I'm also a European lead member of the GBA. So that's what I'm doing.
And Jorg also has a very strong background in the area of cybersecurity. In fact, if this talk was about cybersecurity, he'd have even more to say. I think he cracked the first. He broke into Ethereum, I think, in the early days in front of a lot of people, and he's just got a great story. And he's going to be the philosopher today, right? So you,
yes, indeed.
Joshua's going to be, from the private sector, perspective, Ksenia is going to be from the government perspective, and then Jorg's going to give us his philosophy on that. So, Ksenia, would you like to unmute yourself and introduce yourself?
Yes, so good afternoon from Zagreb, Croatia. So I work in Ministry of Finance Tax Administration for 25 years. And my main part of my career was connected with legislation, was connecting with legislation. But 3 years ago, so I was leader in one of the largest project in the tax administration, compliance risk management system. And now I'm in the position of the head of tax risk analysis in Ministry of Finance. And actually, I was really, that was a beginning that I was really started to be interested in technology and legislation. So how to bring together these two things. So thank you.
Excellent, excellent. So Joshua, why don't you kind of give us your opening statements, whatever you want, and something, if you, all three of you don't mind, what I'd love to hear is how you got connected with GBA and kind of what that experience was. So opening statements on whatever you want to, and how you connected with GBA and that experience so far. Yours is going to be the shortest in that regard, Joshua.
Well, actually, I mean, I've been getting your emails and the meetup notice, like, you know, meetup app notices for years, it feels like, since 17 or 18, right? Because you've been around. So it's been pinging me, and I've signed up for a couple of things, but didn't make it. So I've been seeing it for, I'd like to say, for years. And I feel like I gave my opening statement where I rambled on my brief intro. So, but I'm here to help to address a lot of the specific questions from certain people. You know, and I'll when we get there, I'll talk to, 1099K and are we going to B's for, tax year 2021? And the short answer is 99% sure we will. There will finally be some regulation and guidance from the IRS that's a little firmer, but again, I can get into those details later. I can keep this brief or go into depth. What do you want me to do? I don't want to take over.
No, that's fine. Really, whatever you're comfortable with. These are very sort of go with the flow kind of conversations. I know I have some specific questions that when we get to the Q&As, yeah, I'm interested in asking. Jorg, you want to make any opening comments or statements before we get into the questions and answers?
Okay, so let's dive deep into the topic and let's have a look how we can finally come out of this with our different opinions and find the middle.
Excellent. All right. Well, the opening comments are going to be brief. Ksenia, any opening comments?
I will say that this topic is very actual now, and is actual in, I think, every country around the world. So it's a hot topic, I will say. So we see some proposals of the European Commission legislation at the level of European Union, how to regulate the crypto market. So taxation of the cryptocurrencies are really something that it's very interesting and it's very different in many countries. So it's a good topic to opening the discussion.
Excellent. So I've got a question, and if anybody has a question, feel free to just raise your hand and I'll recognize you. You can unmute yourself. So the first question that I have is, I understand that cryptocurrency is treated as property, at least here in the United States, maybe in most of the world. So whenever you have a cryptocurrency transaction, right, you have to treat that as a taxable event, right? But what are the nuances around that? What are some of the potholes that you need to be aware of in terms of that? And then the other question that I have is, do you see any major changes in tax policy over the next 6 months to a year that people on the call may need to be interested in or aware of?
Yeah, I mean, I'm happy to tackle that a bit, and I'm only speaking from the U.S. perspective, as far as that goes. And also let me say, feel free to connect on LinkedIn, but send a note with it because I get tons of them, and I'll ignore. If I ignore it, don't take it personally. But put a note in there that says, "Heard you on the GBA." so I know, because I'm happy to answer questions directly through there too. So as you know, or maybe you know, but the IRS is going to move their what was originally on a schedule. I can't remember what schedule it was on. The question, do you have, in the past tax year, do you have any interest? And there's a lot of different ways to define that they do in any digital asset. They're moving out to the front page of the 1040. And what it shows is an awareness, but also a data collection effort, and trying to identify a population. It doesn't mean they're getting a big checklist and those are the people going to get audited, but they do want to know, hey, of all of the global set of 1040s, here's all the ones. Here's 13% say they hold some interest in digital assets, and yet we're not getting that kind of tax reporting. So the Treasury knows that there's missing revenue. Right. And that's been bouncing around the news and so on. The hard thing is for them to identify and decipher, well, what's that amount? What's the size? Because heck, I think it's hard enough for us individuals who may trade with some velocity to even keep track of, well, what was my basis? What was my basis? What, which asset? Is it first in, first out? Specific ID? I'm selling my highest price lots to diminish the tax bill, or am I going to harvest losses at the end of the year, which, by the way, if you're just trading Bitcoin, you didn't have losses to harvest because everyone was in the money on December 31. And I'm jumping around to a lot of topics. I don't know people's depth of understanding about this, but harvesting losses means you sell all your, you sell your holdings, December 31 if they're underwater, so you get to claim a lot of losses, and then you can just buy back in on January 1st. That is not currently against the law here. It is with traditional equities to some extent, but anyway, so that's one thing that's going to happen is this IRS change, and so be prepared to check that box. Don't think I'm not going to check it, and yet you have interest, because at some point the exchanges will all have to share more information with the IRS and the government. That's just inevitable, and the way you drive value into the space is unfortunately to have these frameworks, these regulations. So that's a lot of information to unpack there. I can, real quick on 1099s. Right now, it's optional for exchanges to issue 1099s. Someone mentioned a 1099K and getting one with a big amount on it because it represented the aggregate USD sale amount of their assets. And then so the IRS thinks that was where your net proceeds. And so that's why Coinbase is not going to issue 1099Ks for tax year 2020. But the expectation, and Binance US will, because we did it the prior year, but the expectation is that 1099Bs, what you would get from your standard brokerage account, are coming. Now, it won't have all the basis, right? Unless you're in a walled garden, you're on one exchange and you USD'd in, and all you did was do trading between USD and crypto to crypto all in one place, then the B would be accurate because you would have basis and disposal, gains, losses. The reality is that most people don't, exist in one walled garden like that. So you'll have a 1099B that's split with, here's where we know the basis, here's where we didn't, and it'll have to be some self-reporting. So no matter how advanced we get with this in the next year, the IRS says, okay, it's B's, exchanges, use these kinds of tools, do this kind of reporting. I think we're still generation crypto time, 4 years away from something that's where the user doesn't have to think through all this, right? The user has so much responsibility for parsing all this data. And that's, again, why all these tools exist that many of you probably are aware of, like, crypto tax tools. So I'll take a break because that was a lot of information.
Hey, Joshua, could you drop into the chat whatever tax tools you're aware of?
Yeah.
You just mentioned crypto tax. I know that's one of the things that a lot of people ask me about is what tools. In fact, if you go to the GBAglobal.org website, under resources, we have a directory called products and services. And one of the things I'd like to do is load that up with crypto tax products so that people can, they can find what they need. I think that'd be very valuable to the community.
Yeah, and if it's okay, I won't do it here because I gotta sort of look through my list. And how about if I email them to you and then you can share with the community in some way? Is that going to?
Yeah, no, that would be great. That would be great. So for those, I'm gonna share my screen for a second. Jorg, while I'm doing that, you can think about and answer the questions. What changes do you think are coming up in the next short period of time? And actually, just go ahead and answer that question, and I'll go ahead and pull up the directory, and I can address it when you're done.
Yeah. Okay. For me, from a Europe perspective, we have a different situation actually, and Ksenia will tell more about the future coming in because she knows a lot of what is coming. Actually, for example, I'm living in Germany, Austria, and Swiss, and driving around Europe. So here it is like that. If I'm filing for the tax authority, I do two separated lists. The first one is, do I hold my crypto assets for gaining capital? So I will file it and then will announce it. And so I have, like in the US, I can place it for 1 year, and then we are totally free of taxes in that after 1 year, for example, in Germany. So the other hand is, I can very strong file my Bitcoin earnings as a payment. So when I, for example, think of Binance or other exchanges who offer me a Visa debit card or a Visa or MasterCard credit card to pay with cryptos, this is a good thing to report my expenses and my spendings. And in this case, in the European Union, it is different because on that case, I do not pay taxes because I use it as money. What I think and what I believe in the future is we get a big change in regulation. It's called MiCA, M-I-C-A, and that means everything is not under the rule of currency anymore. It is more like everything is an asset to MiCA. So if it comes in, maybe there is a change in watching that. And in my opinion, the best way in the future will be, and that's what I'm always talking on conferences and to people who I'm addressed to talk about the future of regulations, is that I would say we have to separate. If we want to shift the society into a new society, and maybe Bitcoin is the only cryptocurrency, and Ethereum is not a currency, is a token, yeah? Then we have to accept there is a cryptocurrency, and we have to treat it like a currency, and we have to make the separation between holding Bitcoins for capital gaining or spending it as a currency. But at the moment, like in the US, everything is taxable and every move will be taxed. And that's a little bit a separation of that, what maybe the term of currency should be.
Excellent.
That's a good point.
It's a very good point.
Yeah, can I debate that for just a moment? It's to say, yeah, the difficulty is the difference between store value and transaction, right? So you might want to think, can we get to a point where we have a transactional crypto? And if so, will there be, and this is US terms, de minimis exemption, right? Meaning if I spend 20 bucks at a coffee shop, do I really have to worry about my capital gains, short, long term, on that particular disposal of that asset, as the IRS would look at it? Like I've just spent $20, but I only paid $6 for that. So that $20 spent in the coffee shop is $14 of maybe short-term gain on it. I should pay short-term gain tax on that. And the argument from the industry is there should be a $250 de minimis exemption. But the IRS at this point is saying, or let's just say administration-wise, which by the way is shifting, as we all know, with the incoming administration, they're going to have both the House and the Senate. There can be a lot of changes coming, and we don't know what direction yet. But the thought is, why would we leave that money on the table and create that de minimis exemption? What are you going to give us in exchange? And so there's a bit of push and pull on that. And so I don't, Bitcoin as a transactional currency at the retail level, I don't see that being the case. There may be others, and those will be specific, I think, use cases that will have to be addressed over the next several years, in the US at least. And those frameworks will come. And there's other philosophical things we can get into here about whether these are currencies or replacing sovereign currencies or just another form of technology. So,
hey, Mark, do you want to? You got a comment you'd like to make?
Yeah, some of the experiences that I've had, again, dealing with blogging blockchains, is that over the course of the year, I had well over 1,000 transactions. And for taxes, I would be very interested in those programs. And I know they already exist for stocks and the like, where it does let you choose by batch when you're buying and selling. I actually had to write myself up a nice program because there are instances that, for example, I was using crypto for advertising. So of course, for that, I was paying with all of my high profit batches. And then whenever I was redeeming the crypto, I, redeemed the low profit, they did the batches that I got at a very high price. And, it was an absolute nightmare, of course, dealing with it because, you've got thousands of transactions. So, I've got a program going through that, okay, at this date, this was my highest, batch or my lowest batch and, doing everything necessary. And it'll be a lot of fun if the IRS ever decides to audit me because someone's going to have a lot of fun with that spreadsheet.
So listen, towards that end, right? This is a directory that we're trying to build out. So if you come under resources to applications and products, right? This is if anybody's aware of good crypto accounting tools, by all means, please let us know because I want to make that available to folks. And then Juan, well, let's do this. The report that you talked about under resources, right, where we have publications, let's post it there, right? And so Juan, you're a corporate member. If you log in and go under my account to my listings, then you can post it there. And when you do, let me know and we'll broadcast it out to everybody because I think that's a really fantastic report and I'm glad you brought it to our attention.
Okay, that's fine. We'll do that.
Perfect. Okay, so the one of the issues that we have to deal with, right, or at least that I have to deal with is I've got a variety of cryptocurrencies on a variety of different platforms, right? So some platforms are, you can see from my browser, I use MetaMask, right, which is a decentralized platform. And Jiminy Crickets, man, because I've got some on a variety of regulated exchanges. I've got some on some decentralized exchanges. I use a Ledger Nano, right? And every time you send transactions to a Ledger Nano account, it generates a new address, right? And so my question is, how do you deal with that, right? I mean, it just seems like it's just kind of a nightmare. Any tips on how you can deal with scenarios like that?
Am I the one who has to answer that? A lot of these tools, and I just posted up in the general chat, there's like one site that lists a whole bunch of them, although they don't list Luca, which is one I know of. A lot of these tools that are readily, one quick Google search they'll pound you with tons of listings. They basically, you enter your wallet address when you create a user account. And so the software looks at your wallet addresses. Now, if it's HD wallets, is there a parent and it's all the children are generated from that seed, it can see readily through all that, right? And purportedly can, assemble up a gain loss. See, there it is. And this is someone's list. Now it's not up to date. It's missing Luca.tax, for example, but or Luca's tax product. But these software tools will look into that, and if you're doing thousands of transactions, there's businesses doing millions with millions of wallets and millions of transactions, and they actually use some of this software too. Some of it is institutional grade. And we're still early. There'll be more products coming out, but those are the challenges. And I forget, someone mentioned the fact that was it Mark or somebody who does so many transactions. And yeah, that's a burden, but you do want to look at these tools and point them into your wallets, which again, it makes me nervous to let some outside software look in, but all they're doing is referencing the blockchain, right, and the statement of record. And helping you produce that tax, those tax records that you'll need to submit on the schedule number. I don't do tax returns, but you'll have to put it on your return, those gains and losses.
Excellent. Well, we'll take a look at some of those and verify that the websites are still good and put them up. The other resource that we potentially have for folks is underneath resources. If you go to organizations, right? And we do have some organizations under select category. If you go to accounting advisory services, right? Hit search, you will find that there are some accounting advisory services within the GBA network. So these are companies you can go to for tax advisory services. And somebody just put in blockcentury.co is another one.
Yeah, finding secondarily finding a CPA who's I'd say finding a CPA who's versed in this is challenging, but it is just property. It's as if you had a series of real estate transactions, but you can't use like kind or to exempt yourself, right? Like you would with real estate. So it's new, it's complex, but it's also, categorically in some ways much like assets that have existed for years, and so not so different.
I'd like to ask Senya, Senya, from the government perspective, what are some of the things that Croatia and Russell potentially, if you can maybe address this, what are some of the issues or concerns that you guys have from a government perspective on cryptocurrency and its impact on tax? And Croatia, Senya, maybe you want to mention the reports that you guys are working on.
So when we are talking about cryptocurrency, so we start with two things. So one is definition of the crypto assets, which in many countries is not regulated, or in some countries, the countries are preparing the regulations. And tax regulation, of course, follow the regulation of the cryptocurrencies. So we have some mismatch about the definitions all around. So my colleague, Mr. Sroč, mentioned capital gains and the method first in, first out. Yes, we have the same in Croatia, but we have the system which is connected with speculative capital gain. So if you buy and sell in the 2 years, you will have to pay taxes. If you sell after 2 years, you are exempt. So it is the same as you, for example, buy and sell in the 2 years immovable properties. So for me, that's logic because it's a similarity. My economic strength is increased with the cryptocurrencies. But actually, all system is really complicated. So if we are talking about the taxation of the capital gains, as in Croatia, for example, and the United States. So it could be a lot of thousands of transactions. So I'm really surprised. I don't know, actually, maybe exist some programs how to follow that for the tax purposes. I don't know, really. But it will be much easier. But capital gain as a way of taxation is, in essence, is too complex. And I think that we in the cryptocurrency sphere should start to think about how the system could be easier for taxation, simple. So maybe for some, I don't know, withholding exit tax. So no matter of the gain, with some small tax rate, for example, maybe will be much better than we have capital gain now. And the other question is, what about people that tax administration doesn't know about them? So they are in the sphere of anonymity. That's something that concerned tax administration in every country. And we use the tools of exchange of information between the countries, between the tax administration. And we see the efforts of European Commission, as my colleague Professor Mold said about the MiCA regulation. This is proposal of regulation, how to regulate it, the crypto asset markets. So it's very important. But this is, for me personally, this is a really nice document. It's a really big document. But I think that this document will not close the door for the investors and trading on the crypto markets, quite opposite. And with this document, I think that European Commission, that's my opinion, actually is really aware and really look at this market, even if it's smaller than the traditional market, that this market exists. And that is something that should be regulated. Because if you are trading on the regular market, you will be concerned about the prices, for example, of the share. But this is logic. But if you're trading on the market which is not regulated, that you have two problems. This is not problems only for the price of the assets. It's the problem of if you do something wrong, or if you will be robbed, or if you will be stay without anything. So I think that regulation is actually for sure a good way to regulate this thing. And of course, the government and the European Union is focused on that. So we see in that new proposal of regulation. And what mismatch is in the field of taxation around the world. So I checked the survey of the OECD. It was a questionnaire for some countries. So how they define virtual currencies for tax purposes. So we have intangible assets other than goodwill in Australia, France, Chile, Czech Republic, Luxembourg, Nigeria, Spain, Sweden, even Switzerland, and UK. And then we have financial instruments or assets, for example, in my country, in Croatia, Argentina, Brazil, Denmark, Israel, Japan, Slovak Republic, South Africa. Then we have commodity or virtual commodity, Austria, Canada, China, Indonesia, currency, Belgium, coated ivory, Poland. So we have a lot of different approaches to the taxation. And we have in some countries, in small numbers of countries, according to this questionnaire, do not consider any exchanges made by individuals consider a taxable event, for example, in Portugal. And so if you're trading into different countries, or if you are part of the platform, online platform for trading, you know how many legislation for the purpose of taxation you have to follow. So it's really hard from the not only from the side of the business, it's a problem for the governments also. So I think that this approach from European Commission with the MiCA regulation, which is start for regulation of the crypto market, maybe this regulation in the future will follow some directive how to tax in the 27 member states of the European Union in crypto assets on the same way, or not to tax. That depends. But of course, government look at that. So if you look at the Bitcoin recently, so I don't know, price is 40,000 for Bitcoin dollars. So your economic strength is higher. So it's something that government should decide, we will tax that or not. So, but if we tax that, we have to have information who is the taxpayer. So we have some problems with that. On the government side also, it's not easy task. If we spend too much administrative and materials assets to collect these taxes, what we do. So somebody said that maybe we should start to think that small amount of the capital gain, for example, I will say $1,000, for example, will be exempt of taxation, because you will spend too much time and stuff on this, and it will be much costly than this $1,000. So this is the sphere that we have to think how to move on, because, but at first, we need a clear definition. We need a clear guidelines. So it will be the best if can be international, even global. That's for me, in this many of thousands of dealing, it's only way, an easy way of taxation. It shouldn't be capital gain in every country. This is for me too complex. Thank you.
Thank you.
In this case, let me add on to that.
Hey, Jorg, hang on one second, because I want to have you address that, but I want to say something about this that both Jorg and Ksenia are involved in. So this is a report that Jorg and Ksenia are working on as part of the tax working group. It's the it's the impact of cryptocurrency adoption on governments. And as you can see here, it's a pretty lengthy report, but it's all data driven, right? What they've done is they've collected data from block explorers, from different financial reporting engines. They use something called goal question metric, where they say, what's the goal? Then what's the metric that we need to assess the goal? And then, what's the questions we need to answer the goal? And then what's the metrics we need to answer the question? And this report is just too long to go through, but it's just filled with data on what's happening with cryptocurrency adoption and what's the impact on governments in terms of their ability to collect taxes, their ability to monitor laws, all of the administrative functions of government is reported in this, and also governments' abilities to manage their economies, manage debt. It's a phenomenal report. I think, Jorg and Ksenia, I think you guys are looking at possibly getting this thing out maybe in March, I think, but it's right now it's a couple hundred pages. Oh, Jimmy Crickets, there's a lot here. So if you're interested in that report, go ahead and reach out to us, and we'll let you know. You can get more information. So Jorg, in addition to responding to Ksenia, right, I've got another question for you, right, which is all about the concept of privacy and transparency, right? And that is, what is the government versus the individual's right to privacy versus need to know, right? So by all means, feel free to respond to Ksenia, and then if you wouldn't mind, let's talk a little bit about government versus individual, privacy versus right to need to know.
Yes. From my opinion, Ksenia was saying that we need to know who is paying taxes, and we need to know who is who. In my opinion, we have made a big mistake when it comes to taxation and controlling this whole field. We invented a technology which is driven by, for example, smart contracts, which we can address by automatically systems. So, for example, if you use a wallet, I can address the wallet in a way that it is paying his taxes by themselves. So, but no one was writing a smart contract who is checking the output of a wallet if it is a taxationable, I will say, event. So what happens is we have all the control of the paperwork, and we have to set up the companies, and we have to set up the individuals to make the paperwork. So we're talking about a world which has self-sovereignty through smart contracts, and we can code a smart contract as a token, for example, which only have a functionality to make a report. So what we do is we putting the old complex world in a more complex structure in a digital world. So what happens is we copy the old world in a digital world. And when Ksenia was talking about the MiCA report, I've worked my way through that. It was a bunch of work. And it is in the end of the day, we doesn't need blockchain for when we use MiCA. And I will give you a good reason. Because of the privacy. One thing of the privacy is Bitcoin is something which you can blind. So I can prove you in a second that no one can trace my transactions anymore. So no matter what people think here maybe. So in that case, you have a problem. If we more focused on input and output, that means if I transact something from a wallet to another wallet, there is an output. I buy an asset, for example. I buy some goods. I buy some illegal items. there is no way, and this was the same in the old world, where a blockchain can hand over an illegal item. That means someone must act. And if we focused on that, where the business is placed and where the output is, and maybe, for example, we use wallets for making transactions, which is recognized in which country it is, it would be more reliable and easier to tax someone, because we can see where the wallet is. And the wallet is, for example, in Croatia, or it's example in the US, or it's example on the Cayman Islands. And then the wallet token is paying the taxes. So if we go from that point, because the technology is here, that's what DLT is meant to be. Yeah, we're talking only about financial, but smart contracts are more than a financial system. We can easily keep up with the mass of what has one participation in the network done, and if was it illegal or not, because we can address it in an automatic way. And if it comes to the privacy, we can use the people as a zero knowledge, because the taxes and all the regulations come because think about the project of Libra. Libra has had the effect to create a wallet which is checking like PayPal in before the transaction has been done, if it was a transaction coming from an illegal source he is using, or is the purpose of the transaction an illegal one to the wallet it is sent to be, and what was the history of the wallet it was sent to be. So that means you can do zero knowledge transaction, and you can always reach the necessaries of AML and KYC. I think we make it too complex in a world that we want to digitalize. So Joshua, what do you say?
If I may say something, so I agree with Professor Mold that maybe the way is to using the technology in a better way that we started with the wallet. So why not? So everything is open, because right now is not the best situation, as I explained recently. About the MiCA, yes, the people said that the trigger was the Libra, but I'm not so sure. I think that this document brings us a lot of good things. For example, for security, for innovations. So I think that this is something that will bring better in the trading market.
Yeah, from a regulation point, you are right. Of course, I think so.
Jorg, and actually all of you, let's talk a little bit about the government's right to know versus people's expectation of privacy, right? So not too long ago, my bank called me up and they said, we see you're doing some transactions with Coinbase. Can you tell us what you're doing with cryptocurrency? And my response was, is it your custom to contact people and ask them what they're doing with their money, right? And so we have privacy coins, right? We have some people say that Bitcoin is anonymous. Some people say it's pseudo-anonymous. Some people say it's not anonymous at all. Where are we? I'd like to hear your comments, and actually all three of you. Joshua, let's start with you, and then Jorg, and then Senja. Where are we with respect to the government's right to know, and individuals' expectation of privacy? Just give us your comments on that.
So, and it's, nothing. I get great pleasure from, rewatching the Snowden film. Yeah, and so you have use cases like Monero, which was completely a private, shielded blockchain. And unless you know the transaction ID, you can't see, quote, air quoting for the people not who dialed in, what's going on in there, right? There's no exploratory available. It's not like, oh, let me go to the Monero block explorer. Oh, weird, doesn't really show anything. And then you have Dash and Zcash. Zcash, by the way, Zero Coin Electric Company, being in many ways Denver, my little hometown here, based organization, interestingly, but those two have shielding characteristics, so you can shield or unshield. So major exchanges will list those two tokens. They won't list Monero right here in the States because of its privacy features, but they'll list those other two as long as you do not shield, choose to shield the transaction. And you have to go through all the standard KYC, but also bear in mind the government's going to be interested in the information related to those two, Zcash and Dash. And I would expect in time that they're going to be requesting information from the major exchanges on the users of those particular tokens. So, understanding that from a government perspective, visibility into financial transactions is the claim they make to root out terrorist networks, financial crime operations, and so on. So you'll see, I think, great pressure globally to delist coins with specific privacy features. And I'm not going to take a philosophical side. I mean, I work in this industry, so you can kind of figure out where I am on the libertarian meter, right? But then back to traditional, traditional 10-year-old, right? So old, but back to networks like the Bitcoin network or Ethereum or any of the other major XRP and so on. Those they're not really anonymous. They are and they aren't, right? We can use Chainalysis and Elliptic and some of these other services out there to look and try to give a profile. We think that this wallet address belongs to this and this person or this entity. And a lot of times you can be certain. Like, I think it's really well known. Oh, if you follow Whale Watch or Whale Alert or whatever it is on Twitter, you can see, oh, look, 10,000 Bitcoin moved from unknown wallet to Coinbase. You can actually see, right? And be fairly certain, yeah, that's that address, right? Everyone knows the big exchange addresses that are out there. So yeah, Bitcoin is not so anonymous. And over time, we're still so early, right? I mean, it's still so young. In 5 years, 10 years, imagine the supercomputer computing power that'll be applied to deciphering the transactions on the in these ledgers. Still, I think we're still in such the early days, right? We're all in the technological phase, and I know folks around on here about my age, or some of them. Remember getting those AOL CDs in the mail? Get on AOL 3.0. Look, here's the CD in the mail. That's where we are with this technology in terms of the life cycle. We're not where we are today with the internet, with this technology.
Joshua, I just want you to know you've ruined my day.
Why? Well, you remember, yeah, see, because
when you talked about the AOL CD, right, I started hearing in my ear the right. It's like an earworm. It's going to be in my ears the rest of the day. How dare you?
Yeah, well, I just want to keep in perspective. We think, right? Yeah, 5 years ago, no one could look into the Bitcoin ledger really easily and be like, oh yeah, there weren't all these explorers. I mean, I can just click on any address. And maybe it's on the front page of the website. GBA, hey, here's our wallet. If you want to send us something, a donation or whatever, yeah. I can just go in and start poking around Explorer. But someone with an advanced tool like Chainalysis can possibly say, oh wow, this address. Well, this is also, we see activity here. They're both connected here. We know that like 87% likelihood is this person.
Yeah. So let me do this. I want to hear from York for a second. One of the GBA members is a company called the Blockchain Intelligence Group. They're similar to Chainalysis. They're out of Canada, and they do a lot of the same kind of work. So if you're looking for a company or a vendor that can provide that kind of analysis, I would encourage that you take a look at Blockchain Intelligence Group. Jorg, I'm sure you agree with everything Joshua said 100%, right?
Sorry to say that. This is often what I see in my daily educational lessons, in our courses and our deep diving courses, that many people have only a flat knowledge about what Bitcoin is and will be. So let me give you an example. If chain analysis, for example, or cipher trace or whatever is going to combine the wallet addresses with known people who exchange on an exchange, they're totally right that it happens at the moment, and you can say, okay, from that wallet address, one guy who has made KYC on my side has exchanged something. What many people underestimate, and that's why many people not understand why the price was driven to 40,000, is from an investor point, they said, okay, now the people rushes in with the money and concealed money and everything. It's about the people who held that privacy. So, for example, in my world, and this is what I talked in the beginning, to keep the balance between regulations and I would say the fail of the economy and the politics we see now in an economy crisis, to keep my money, because the money is in my pocket and not in the hands of an exchange, because the exchange will be shut down because someone is saying, oh, we have some concerns about AML that freeze all the accounts and I have to make monthly payments. I'm in a very bad situation because I can't force to open my account on the exchange if the exchange has been shut down by concerns about MLA. So I do not address my money. So what that leads in the last 3 years to 2 points. We have coin mixes which are far away from CoinJoin. We have a strong society using not only coin mixes, we have Taproot. This is something like we call confidential transaction. That means you can see only in your block one transaction, and I've combined up to 100 transactions behind, and you can't see the value and you can't see where they are going to. We have a new kind of wallet. It's called the magic wallet. This is exchanging private keys. This is not exchanging anything. I send my private key to another wallet. This wallet will automatically import the private key, and my wallet will kill the private key, the former private key, because it's useless, because another one can access my private key now. Okay, so every transaction I made is binded on a new private key, and this private key is sent to someone who accessed that. That means we haven't got any ledger entrance. And today, when I'm looking at my tracing here, we have with this wallet about 1 million transactions at the moment. So the technology we use for making the Bitcoin blind has been invented 4 years ago when Ethereum was on the rise, and many people from my philosophy had, afraid about becoming a George Orwell 1984 nightmare. Many people started to go blind with their transaction in case of what we see with the worldwide economy crash, call it pandemic or whatever. The trust, the more we regulate, the more trust goes into blind. And this is not the typical guy who buys a weapon or something like that. I give you a good example. The IS, for example, if they will ever turn in the Bitcoin market and they bomb a bank, do you think they go with a B cycle to the next hotspot and call a guy who can exchange $1 million from a bank into Bitcoins? So offshore accounts, the fastest way to exchange Bitcoins today. That's really an important thing, because offshores are credits. So I get a credit for my Bitcoins, and someone later I deliver my Bitcoins to the offshore. So, and you can't trace it anymore. So the question I ask always, if it comes to privacy and government, of course we need something, but the other question I ask myself, and this is not an American problem, Americans paid only 23% of the people in America pay taxes before cryptos, and it's the same amount of people paying taxes if cryptos is there. So the question in taxation and all of this money laundering and whatever you want to say to that is, why can't we reach the people to pay taxes? So, and that's the biggest problem. It is not about that someone is hiding $100 which he has not taxed. It's a mass problem, okay? Millions of people hide $100. There's not one guy, the guys who hide 1 million away, sooner or later, you will catch them because there is an output, right? But that's what I want to say. In this world, we have to change our mindset about how we address people. And I think the Bitcoin thing, and this is one thing about the technology, which no one understands really. The Bitcoin thing is some kind of balance. If they treat me in a way that I have to pay 50 or 59% of my income in taxes, and the low incomer is saying, why should I go to work to pay such high taxes? Why not using Bitcoins? That's the question. So that's my point.
That's
about privacy.
Yeah. Jörg, I love having you on these calls because you always bring information that's so insightful. So what I'm hearing there is there's really three realities, right? The IRS and tax authorities do have an ability to look beyond what most people think, right? Using some of these analytical tools and using, they do have very sophisticated tools. However, there is a community of technology that are also building very, very sophisticated tools to be able to maintain that anonymity. right? And most people, depending on what their level of knowledge or education is, are somewhere in between, right? So, to Joshua's point, it's very, very early in this technology space, and there's a lot of misunderstanding, a lot of misperceptions, a lot of fear, uncertainty, and doubt. There are a lot of people taking advantage of the system, right? It really is still the wild west from a taxation standpoint. Senya, so my question for you, and we have some questions in the chat, so I'm going to ask some of you speakers to take a look at those and address them. But Senya, my question for you is, do you have any conversations within government, right, where you're asking yourselves, if people are doing peer-to-peer transactions, right? It's one thing if they're working through regulated exchanges that are filing reports, right? But if I send money through my Ledger Nano to somebody else, to somebody else, to somebody else, and we're not going through a regulated exchange that's making any reporting, right? Or if people continue to use privacy coins, right? What is the government thinking about? Are they thinking about potentially banning privacy coins? Are they thinking about trying to clamp down, looking for alternative? What kind of conversations happens within the halls of government about where this thing is potentially going and how governments may respond?
So I don't think that any banning is not the option. But of course, if the tax legislation is in force, whatever legislation, for example, if you sell the cryptocurrency to you, for example, to individuals, you have documented that. So if you earn and according against the regulation, then you have a problem, and then we have a problem. So it depends on regulations, but it will be not fair taxation that in the same situation, if I earn and have to pay taxes, for example, on the Bitcoin, and you have some privacy coin and you will not pay taxes, that is not fair taxation. So the government should assure that everyone is according to the legislation, and we will use some tools. But I don't think that anyone think about banning something. But if the situation, for example, could be for against the money laundering directive or something like that, if we see that or prove that, then everything is possible, even the banning.
Yeah.
But we are not talking about right now.
But let me open the floor for any questions. If anybody in the audience have questions, there's all kinds of great questions. If you want to ask it, you just raise your hand, unmute yourself, and I'd be happy to recognize, because we like to keep these things totally interactive.
Yeah. Go ahead.
Yeah. Yeah, a quick question. So I guess it goes back to the previous one, probably true for others. So I got into Bitcoin a little while ago when my son asked me to get interested, but I didn't do much. But in November I started. So I had and at that point in time there was no KYC, nothing on Coinbase. It's just like they just took your credit card. They didn't charge you any interest or something like that. And then I forgot about it. I wish I had not. But anyway, long story short, the question I have is, this is the first time I'll be doing my taxes and all for crypto, if at all if I do a sell, right? So the question is, can I just register it under my company, like the LLC that I have, and so at least I'll have a little bit of, say, some expenses that I have. I bought a new laptop because I don't want to trade crypto on a laptop where my kids are doing video games and other things and going to see movies and all those kind of stuff. So I don't want to do that. So can I do some expenses and put it into a company to mitigate it? That's my question, I guess.
Yeah. This is a very specific tax situation, and so we'll address it here. And I'm just going to say, if we had like 10 of these, it would bog down the call. But for this specific one, yeah, if you think to yourself, hey, why don't I set up an LLC, and then I can deduct all the expenses, all the things associated with managing this portfolio, and I can reduce a little bit of my taxable burden. Yes, sure. Is it offsetting the cost of having an LLC, managing it? Oh, where do I put it on my taxes? Is it more complex? Now, how about this platform? I'd love to have an account on another exchange oh, but I have to onboard to that other exchange as the LLC. That's actually a corporate account, not an individual user. So I just want to point out that every solution creates a new set of problems. And so, yeah, you could do that. You could be like, oh, I spent $1,000 on a computer just so I can look at the blockchain and make sure everything's hunky-dory on there, right? But you might also encounter just more complexity in your life. So you have to weigh, is it worth saving, $800 in tax? Hey, if it's 800,000, sure, right? You have that many expenses associated with it, but remember, it just still flows through on your 1065. It's not like you have an LLC with employees. So, you message me privately. We can talk about this a little bit more if you want offline, but it's, there's pros and cons, right? Like I know some old Bitcoiners who set up over, Singaporean LLCs that they trade through, hey, listen, you think you're going to get away without going through FATCA, the US foreign asset tax controls? I wish you the best of luck. But there's a lot of different strategies. Yeah, LLCs are one of them. Hopefully I've addressed that. Hey, and I'm sorry, Gerard, I'm going to circle back to another topic. I'm going to leave this one for a second. Just say,
hold on, before you do, somebody did put in the chat that there's a tax accounting firm that can be beneficial. And then also, Praveen, just a reminder, if you go to the GBAglobal.org under resources, go down to organizations, and then select the accounting advisory services. And so,
okay,
so that's just another, if you have questions, that's another source, because Joshua does have a full-time job. We want to make sure we don't bog him down too much.
Yeah. Sorry about that. Yeah, thank you.
Crypto never sleeps, right? 24/7. At 3 a.m. I'm getting pinged. It's no joke too. It's crazy.
Yeah. In fact, I'll put this link in the chat if anybody's interested in it. And then, okay, Joshua, go ahead and pivot to your next real
topic. Quick, Gerard, you brought up something earlier. If I went ahead and I saw a post that you put into nextdoor.com that said, hey, I'm selling a bed for $300. And I said, oh, I really like that bed. How about $250? And I go to your house and I pick up that bed and I give you $250 in cash. Wow, the government just missed out on some tax revenue, correct? I mean, you made that by hand, that bed frame. And therefore there's that's taxable income that's lost. And so I think when, we think about the overall tax environment for this, right? It's a new asset class. The government's not sure how are we going to collect our piece of this. And it's not just a domestic asset. It's something that can be sent overseas. And there's this whole ecosystem around it. Yeah, there's definitely major questions around how that's going to be integrated into the existing regulatory architecture, and we'll get there, right? But there's another side of this coin, so to speak, and that is central bank.
For your example, do you know how they solved the problem in Japan? There is Bitcoin a legal tender. In Japan, it is on the merchant side. That means the merchant pays higher taxes because they address the problem and says, okay, if the taxpayer is not willing to pay taxes, we have to keep it on the price.
I mean, the thing I think that this ecosystem will drive is not so much how are we going to tax the transactional currencies that may arise that aren't sovereign, but rather from the sovereign currency aspect, from central bank digital currency aspect. If we can sweep, and by the way, this is like if I were a government person with that hat on, if we can get rid of physical cash completely and have just a centralized digital ledger, we then think of, they're like, think of all the tax revenue that we can get that we aren't getting. So when Josh goes to buy that item from Gerard that he might have bought, just with physical cash and it's not taxable. Now suddenly, hey, I have to send him, U.S. Treasury digital currency from my phone to his phone. Boom, there's a record. Hey, where's our tax? So I think, there's sort of that, what I call the darker side that maybe is 20 years out where, we provide direct financial stimulus from the central bank into people's phones to spend at a list of approved vendors because we need to stimulate the economy. By the way, if you don't spend fast enough, we're going to take some of those basis points out of your wallet. Wow. Right? Let
me throw it over. Let me throw it over to Jovan because I know he was interested in saying something. And then after that, Marina.
So hi, I'm Jovan. I'm Director of Global Development for GBA. And I just wanted to mention a company called Zen Ledger. They are a member of GBA. They are based in Washington State. And their tax solution it attaches not only to exchanges, but also is to TurboTax and to Intuit tax products. So a word from our sponsors. That's what I wanted to say.
Hey, Jovan, we need to get Zen Ledger on the list because they're not currently on the list.
Okay, so maybe there's something for you and I to.
Yeah, let's talk right after. Let's talk right after this. So Juan and I are going to talk about getting.
And the interest for this topic is so big in the among the GBA members that I believe we need to have a third one sometimes in a month or 2 months.
Well, I will say this for lawyers and accountants, we are hosting the next event that we're doing on this topic is called Cryptocurrency for Accountants. It does offer continuous education credits. Lawyers and accountants need that for their credentials. I think there's a cost. It's a 4-hour seminar. It's but it's $3.99. But it also gives free membership in both GBA and the Accounting Lawyer Association. So that's a seminar. We're going to be a paid seminar for educational credit and. Check the calendar. I'm not sure what the date is, but
anyway, to finish, if someone wants to wants to talk to Zen Ledger, contact them directly or contact me, and I will put you in contact with their.
Yeah, you go ahead and put your contact information in there again.
Okay.
Cool. All right, Maria,
it's happening now.
Okay. Right, Maria,
Yes.
do you want to comment?
Yes. So I have a couple of clarifications, and I think I understand the answer, but I just want to clarify because your topic said, did you buy or sell crypto this year? If you only bought and didn't sell, it's not a taxable event, right?
Correct.
And the second one I want to clarify is something that Ksenia was talking about. If every time you use ETH only for gas and it's a taxable event, for example, or buy a cup of coffee and it's a taxable event, it becomes a lot more expensive to do the accounting than the taxes you pay. Is there anybody advocating, explaining to the governmental organizations to deal with it in a more appropriate and efficient way?
So I cannot answer on that if that's happening in United States. But actually, in my country, so in the many countries which are tax that as a capital gain, you said correctly. So if you have your crypto in your wallet and you not sell that, this is not taxable event. And if you buy the coffee with your Bitcoin, will be not taxable event arise. But if some countries tax this situation, it is, as I said, it is too complex, and this question should be raised. For example, if the expenses of the government side is much more higher than collect taxes, that's a logical question. Is it what we are doing? So that's my opinion. And this question should be raised.
As an note, I will say in the US, it is a tax-free of $600 a month to spend for coffee.
I wasn't talking about coffee. I was talking about using in a DeFi using Ethereum for gas. But since
you're putting on the gas fee.
I think this is the same situation. So I don't think that legislation in your country is so detailed that that's going so far that say, oh yes, if you use DeFi for the gas or Bitcoin for the coffee, this is two different events.
No. I don't mean gas that way.
That's the same for me.
No. I think
you're talking about the fees, right? You talk about.
Yes, I'm talking about gas on a chain.
This is something you can collaborate. This is something you can collaborate against the price. So if you have a price from 100 and you have to pay gas fees for the price about 10 gas, I will say, and it's $1. You can say, okay, it's not 100. I have to tax it 99 because it's a spending for the item. You know, it's every time you buy an item and you do that.
So All right, excellent. Do we have any other questions that any burning thoughts that anybody would like to ask or share? Any information, resources? Again, the purpose of this call really is the panelists kind of facilitate, right? But really, you guys all bring the questions and the answers, and we like to promote communication amongst all the participants. So,
hey Gerard, I have a question for you.
Sure.
Is this considered legal advice?
Absolutely. Every bit of it. You can take it right to the back. No, I'm just kidding, Mike.
Lord, no.
Do we need to remind people since we are being recorded?
Yes. Nothing provided on this call is considered legal advice that you should
tax advice,
right, or accounting advice. You should consult a professional, of which none of us on this call are your professional.
Thank you, Gerard. Otherwise, you would not look very good in stripes.
Yeah, everything I'm saying is anecdotal.
Exactly.
I'm just making it all up, quite frankly.
Gerard, do you know what's happening with the Texas government interest in this one by any chance? Because you seem to be in this is all about people who have experienced what happens in the government. And I did hear from one of the parties. I mean, Josh was saying that Colorado is very much into it, and then Kentucky wants to get into it. Do you know anything that's happening in Texas or Dallas by any chance?
I do indeed. So if you're looking at my screen, let's see, is this, let's go to associations. The person you want to talk to find out about all things Texas in blockchain is these are our association partners. Hang on, since health, I guess it's not alphabetical. Texas Blockchain Council.
I see.
So the Texas Blockchain Council, what's this guy's name? It'll pop up in a second. So I interviewed him on a podcast. For those of you who are not connected to GBA, we do have a podcast, which is awesome. If you hit the main page and get the podcast, you can connect to our YouTube channel. This event will be up on our YouTube channel. But if you hit this website right here, TexasBlockchainCouncil.com, I'll go ahead and drop this in here. That'll take you to Lee Bratcher is the guy's name.
Mm-hmm.
So that's and when you talk to him, tell him he's ugly and his mama dresses him funny, and tell him I said that.
Hope he doesn't punch me in the face or something.
Well, he is Texan, so yeah, you never know. Yeah, no, Lee's a great guy. I interviewed him on one of our podcasts, and we're actually, Mark, if you're on the line, we need to circle back with Lee to talk about the government business blockchain platform. Let's do a quick commercial on that. Mark, you want to tell people what the GBBP is, because I think it's relevant to everything blockchain and cryptocurrency.
I have a question. Can you guys hear me?
Sure. Yeah. Go ahead, and then Mark.
Yeah. All right. So my question is specifically related to liquidity providers, and I don't know how much everyone here has done any of the DeFi stuff over the summer, but let's say you're a liquidity provider, and my understanding is anything that you earn from that is deemed as ordinary income. But how is impermanent loss treated?
Oh man, this is like the old, I lost my, generally speaking, I lost my private key or I invested in a project and it went to zero, that kind of question. Similar.
Well, no, it's if you're a liquidity provider, and I guess if you're providing liquidity for a pair of assets and the assets don't move in the same direction at the same time, then there's a chance that the underlying asset that you provided will have some sort of impermanent loss. There are some tokens out there that are saying that they're solving that problem, like Bancor and I think Dodo or something like that. But if you experience impermanent loss, does that get treated as a sale? But really what you were doing is providing liquidity. So it gets very complicated, and I haven't been able to find an answer to this.
No, it's such an emerging space. I don't think there's any formal guidance, and you're sort of going to define it. You sort of define it through your tax reporting. You can say, okay, I'm going to take that as just a a capital loss to the extent I have gains to offset it against, or I have to carry it forward. You know, I'm limited on how much I can use that loss on my taxes. I'm sorry, I'm not going to give you a really concise or definitive answer, other than I think it's at this point you could just have it be a loss to offset your ordinary gains, but that you know, I think the DeFi is one area that I think the government is still very far out on addressing and unsure.
Right, and then kind of a caveat to that is in some of these instances where you provide, if you're a liquidity provider and you put your tokens into some other system, they will give you something back, basically allowing you to claim those tokens. Something like Balancer will do that. So you'll provide something like Ether into Balancer so that it then goes and does some automated liquidity pool services. And you get these Balancer tokens that basically act as a voucher for you to go back and get what you claim, although those might experience an impermanent loss. Is that providing that Ether into something like Balancer, is that going to be considered a taxable event?
So I actually had a lunch with a lawyer, and we were discussing liquidity providers. And the conclusion that we came to, but of course he said, but you know, this isn't my professional advice, you know, unless I get paid to take the risk, is that when you put the your tokens into the liquidity provider, what you're actually given is, as you mentioned, the liquidity provider's token. Now, on their displays, they normally show you something that is purportedly your current balance on each and the like. But you actually don't have that at that point. You know, what you have is a liquidity token. So it's when you move in and out of the liquidity token that is treated as two sales, and you calculate your cost bases from those. Because in addition to your number of each token being shifted according to the relative price, of course, the prices of the relative tokens have gone up and down. So basically, you should treat it like two sales, or, you know, two exchanges where, you know, you start with your pair, you pretend as if, well, you don't pretend. You start with your pair, you say that you're selling them, and that's a taxable event, and it establishes the cost basis for your liquidity tokens. Then the converse operation happens when you sell. When you withdraw from the liquidity provider, you're selling the liquidity tokens and you're setting your cost basis for your pair.
And how strong do you think a counter argument to that would be, that you are just receiving a voucher? It's not really something that could be sold, it's just a custodial token.
You could make that counter argument. The problem is that then sort of fuzzes things, because what you put into the liquidity pot, you know, is changing value. And then suddenly you have different numbers of tokens when stuff comes back out of the pot. This was actually something that he was talking about, because he said, well, it seems that, you know, you could also do what you were saying. And he actually backed off on that concept when I said, well, you know, you don't get the same number of each token back out. And, you know, at that point, it's like, wow, that's really ugly what that does to your cost basis.
Hey, Mark, can you put your contact information in the chat? And I'm not sure who NTG is. NTG, what's your first name?
My name is Nathan.
Nathan, awesome. Yeah, so why don't you guys exchange contact information, because Mark is knowledgeable on so many things. He's got an experienced background in artificial intelligence, but I don't think it's artificial. I think it's very natural for him. Mark, Do you want to share with folks just a little bit about some of the things we're doing at GBA, including the GBBP and the token and some of that stuff?
Sure. So the GBBP is the government business blockchain platform. And what it is it is a fabric for connecting as many different blockchain platforms as we can get to connect to us. And the purpose for this is so that we can offer any service that's on a given blockchain platform to any other given blockchain platform. It's sort of a sad thing that every single blockchain platform needs to separately create a service, particularly when there are common services like arbitration, when there are things like prediction markets, when there are oracles that are attached to some of them. So what we have is a core Hyperledger Besu blockchain. That's a proof of authority Ethereum, and we have the gas price set to 0 so that we don't have to deal with transaction costs, at least in the center of the network. And we have a cross-blockchain token. So fundamentally, we have gateways that look, each individual gateway looks at a particular blockchain in addition to the Hyperledger Besu. And whenever there is a transaction calling for some sort of inter-blockchain operation, the gateway picks that up from one blockchain and then relays it to the corresponding blockchain and back again as necessary. This allows someone, say, for example, on something like Hyperledger Fabric, to conceivably buy something off of the public Ethereum network, because we have a utility token, got a set value so that you can actually transmit money through the system. And what we're hoping to do is to build a very large marketplace of government offered services and make it so that it's relatively easy to do one-stop shopping, so the user doesn't know where the service is actually coming from. It just looks like it's coming from this one easy to use interface. What else did you want me to cover, Gerard?
It's good if I unmute. Yeah, so what this basically going to do is allow people to connect their blockchain solutions to this platform and allow governments to order services, whether it's citizen services like marriage license, birth certificates, emergency management, healthcare, and the cryptocurrency maturity profile is going to be linked to this. And this is going to be an economic reporting mechanism for public and private sectors, really to let them know about what's happening in that space. So it's just one of the cool projects. This is just one of the cool projects that GBA is working on. We shared with you the other one. Oops, hold on a second. All right. So if you're not a member of GBA, we would highly encourage you to join. It's just a great group of people. All right. I don't know where that noise is coming from, but it's
I like that.
Yeah. I'm just not sure where that's coming from. That's okay. But if you're, I would encourage you to join, because it connects you to all sorts of stuff. I'd like to also tell you about this event that we have. I think that's you, Louis.
No, that's not me actually. I'm actually on mute, so that's
okay.
That's not me.
All right. Well, anyway, let me share with you the event that we have coming up in May, although it potentially may get rescheduled. We got Don Tapscott, who wrote the first enterprise book on blockchain. He's a consultant to folks like Bill Gates, and Jovan makes a comment that it's like Oracle has a line item on his budget. It just says Don Tapscott, but he can smell a power wave a mile away, according to Jovan. Scott Sternetta actually invented blockchain in 1991, he and his research partner. They put the first blockchain into production. Satoshi Nakamoto's white paper, out of the 8 references, 3 of them belong to Scott. So I'd like to say that Scott taught Satoshi how to blockchain. And then we've got speakers from all over the world coming. They'll be coming to the U.S. Capitol. They'll be coming to the U.S. Department of Commerce, Library of Congress, the British Embassy, Embassy of Bahrain. And so you can just kind of get an idea. This is going to be an incredible event. And what we're trying to do with the technologies that we're building and with the connections that we're making through events like this, through our different working groups, is we're trying to create a fabric of people, technology, and capabilities to create a governance structure that essentially, tries to stand against the consolidation of large concentrations of power. So really kind of leading towards a more decentralized, distributed power structure. If you come under associations to working groups, you will see that we've got over 50 working groups, right? Acquisition management, asset management, big data, campaigns, fundraising, cannabis, economic analysis. I mean, the list goes on, and they're all doing, well, I can't say they're all doing incredible work. Many of them are doing incredible things. This blockchain application architecture is going to be changed to blockchain interoperability. It's where the GBBP is going to lead. Mark will be the leader of that group. Insurance, international trade, I mean, records management, smart city, supply chain, just all kinds of things. So if you're interested in any of these topics, I would encourage you to join GBA and join some of those groups. And then the last thing I want to tell you, there's over 8 gigs worth of information on the site. There's literally too much to cover briefly, but this global fundraising, networking, education opportunities, we have a relationship with the World Business Angel Investment Forum. So we host the US office of that organization. It's connected to the G20. So the idea is to basically connect investors and startups here in the US with funding opportunities globally. Malaysia, cryptocurrency tax, that's today, right? This government blockchain public forum is hosted by the GSA, and basically they get government folks together to talk about blockchain and government, decentralized payments, smart cities. So as you can tell, voting in elections, we really cover the gambit of just lots and lots of stuff. This all takes us to February 1st. So we've got lots of stuff going on. Right. So if you're not a GBA member, I would encourage you to join. Just come to the membership tab. You can join as an individual member, right? Which is $2.99 for an individual. Unless you're in the government, it's free. If you're a student, it's $49 a year. Organizational memberships, it's awesome. We're changing this definition so organizational members have the opportunities to sponsor working groups and chapters. And so if you have any interest in that, please, by all means, reach out to me or Jovan. Right. Any other questions on the subject of cryptocurrency and accounting?
Yes, they're all. Since you called me, is Louis speaking here. I just wanted to add kind of a comment to everything that's been talked about. I do see that the crypto network fees are skyrocketing, especially when you're trying to do multi-step transactions on the Ethereum. It could easily cost like $100. So we know like Ethereum's value is based on usage. So people have to usually pay more for the transaction, for it to go faster. And currently the block size is limited. So I think if Ethereum, has an upgrade per se to increase the block size for throughput in the long run, it could potentially end up being bigger than Bitcoin. And also in the future, Ethereum could end up tracking the dollar since the Ethereum transactions will be faster and quicker. So that's kind of my input on, this is not financial advice, obviously. This is just my input as a person that has been in the field for almost more than 3 years, advising different companies. So very interesting to see how things are playing out.
Well, we always like to hear from an Ethereum maximalist.
Definitely not a maximalist. I'm actually,
It's programmable money, right? So the use case for ETH and the ERC20 tokens is my estimation far different than say Bitcoin is, which Bitcoin is a store of value. Now that's my perspective again, but Bitcoin is a store of value. ETH as programmable money, different use cases, different applications, and as far as what the relative USD value of those assets will be, or other fiat assets relative to those digital assets will be in the future, hard to say. It's it's the investment game, so to speak. But I'd like to think that programmable money is the next step in the evolution of technology, and as it applies to value transmission and creation around the world.
Let me say something that is an add-on to that. So Ethereum has just made the step into Ethereum second version and moved away from the proof of work, that means no blocks any longer, into the proof of stake. So this entity is a big risk, because maybe I made a bet that we will see an Ethereum hack, a large one this year. But on the other hand, it's the best Ethereum could happen, because Ethereum is not a monetizing system. I'm more of what you said about programmable tokens. Ethereum is the bridge to shapeshift our economy into a digital economy. I think that's a bridge. So you can separate. We have a digital currency that always, when you say the money of internet or whatever it will be Bitcoin, and Bitcoin never will be become the functionality of Ethereum, because the difference in the two opinions about what Bitcoin should be and what Ethereum should be is very different. And we need the systems, because that's the reason why Bitcoin hasn't got any smart contracts by native. Yes, so it was very focused on becoming a payment processor or something like that. Indeed, Ethereum is the golden goal in a way. When I see other projects like Hyperledger Bisu, for example, which is a combination of Ethereum and Hyperledger, I think there is the gold in the future when it comes to the DLT technology and programmable items like business and everything in there. And yes, I see a bright future in that.
All right. Any other, it's about 11:41. So any other parting thoughts, comments, questions? Anybody want to brag about how awesome they are? Anything like that?
I'm going to make a pitch for security and tell everyone on this call, just you're in the ecosystem. You may know this already, but multi-factor authentication on everything, obviously antivirus software, but just multi-factor. Are you using a YubiKey or some sort of hardware device? Are you using, Authy or some other phone-generated token app? Or the worst case, are you using, SMS text messaging to get your two-factor codes? Because even SIM hacking is a risk. So, you're on this call, your name's already out there, and we don't know who else is on this call looking for targets. So just be vigilant, right? Be wary and be careful out there, because when you are your own bank, you are a target.
Yeah, I'd like to echo that. One of the speakers who was on our last panel, his phone got hacked. He was using SMS authentication, and they literally took in a moment, they hacked his SIM card. They went into Coinbase. They took everything. They were gone. And by the time he got the notification from Coinbase, it was all over. So if you're relying on SMS for your security, that's not a good way to go.
I'd like to actually hop in there. By the way, this is Michael McPherson. I'm with Red Lion. We're actually an IT security and endpoint security firm and a professional services firm in the IT security market. But I wanted to also address the fact that there's going to be vastly increasing amount of regulations surrounding how Bitcoin is transferred, how it's stored, and the various accounting programs that are going into all of this. And as you're looking at trading in Bitcoin and things, you're going to have to understand the cost of compliance as it relates to keeping yourself or managing or trading or storing the Bitcoin, trading anything, especially in an accounting firm, anything with PII and things. The compliance level on this is going to go up significantly over the next 2 years, I would expect. So that's a hard cost that needs to be accounted into a lot of a lot of this as well.
Yeah, thanks for bringing that up, because there is a lot of regulation coming over the next year, if it still stays aligned with what the previous administration, as it leaves and the new one comes in, if they stay aligned with that tax. For example, I don't know if people have been aware of what the proposed wallet regulation that as a midnight ruling was going to come from Mnuchin, that was going to effectively say, listen, you can't send. Well, there's something called what they call a non-hosted wallet, which has never been really defined, but we all know what that means. It means one that isn't in an exchange, but rather on your phone or laptop or a piece of paper. But it was going to prohibit transactions from exchanges into non-hosted wallets and back, right? So you couldn't send your coin off exchange, so to speak. Now the industry went hard after that, and there's still a lot of negotiations.
Joshua, real quick, do you mean a cold wallet? Is that what you're talking about?
Any wallet other than one hosted by an exchange.
So a cold wallet, for example.
Cold, hot, yeah.
All right, thank you.
Yeah,
Thank
your
you.
hot wallet, your hot wallet being maybe one on your laptop or your phone, a cold one being maybe a hardware device, right?
Just wanted to clarify that. Thank you.
Yeah, sorry, but and then I go fast through this, but I think the idea now is that there's also the travel rule. So if anyone wants to Google after this, you can look up the crypto travel rule. You can look at the proposed wallet regulation. So just to dovetail off of what Michael's talking about, Michael, if you would share with me your LinkedIn or whatever, it'd be great to connect. But
sure,
I think he's right. Looking to the future, there's they'll say, oh, we want Bitcoin to be 300,000 USD. Yeah, there's going to be an awful lot of regulation that's going to need to be around it for institutions to feel comfortable dropping that kind of investment into that space to drive that asset value. So
the most challenge for compliance will come at the moment you run a DLT project and you're happy having this DLT project, and tomorrow AWS is saying, oh, we can't figure out where the problem is where our service is in, and then you lost your company in the cloud.
Hey, Joshua, I got a question about that regulation. I agree with you completely. So, Joshua, if how does that apply to, say, DeFi exchanges? Right? Would that regulation apply to DeFi exchanges?
Well, DeFi, there are no DeFi exchanges. There's only a DeFi exchange. Sorry, that's what they say. Like, the whole nature of DeFi is that there isn't an exchange. It's just sending around, and that's hypothetically that would have applied, right? Like, how do you it's a lack of understanding and education, I think, at the is that Mnuchin like, oh, wallet, private wallets, that's just Swiss bank accounts, and so the industry has really worked hard to educate.
Joshua, what do you think that Shapeshift was killing the KYC?
Oh, that because they're going and if all they're doing is facilitating DeFi swaps, they don't have to KYC because they're not the counterparty to the transaction anymore. Isn't that I'm sorry, I'm not super familiar with the position paper on it, but I'm thinking that's what it is.
You want to share with the folks listening, because this is a really important topic about Shapeshift and what they've done with KYC.
Yeah. Okay. The most important thing is that we have to take a look at the history of Shapeshift. Shapeshift was founded by Eric Furhers, and Eric Furhers is one of the guys in the times when I was young in Bitcoins, and he had a mindset about a freedom world. Then he opened his exchange for also money exchange and everything in there, and they forced him 2 years ago to make a KYC on his exchange, and he does it, and the compliance ruled in more and more and more, and I had a discussion to that was forcing him to say, okay, if I do not offer service are in compliance, I can remove the KYC. But this is that was an fact of saying, okay, hey guys, if the regulations go too far, we are leaving. I think this was a big impact for the crypto society, which comes from the former times, which is not only interested in asset management. So and this has a big impact on. I had a lot of talks with people in regulation, which are very not comfortable with this situation, because that was a wrong sign in a wrong time, I will say. But finally, that shows that the spirit and the philosophy of the self-sovereignty
compliance driven by the user is not going away at all. I would say.
Yeah, I'm not familiar enough. I have to admit, I'm not well versed in DeFi. So to know whether that's, that's okay to drop KYC. I mean, I think it's kind of surprising myself, but it's also more of a lack of, admittedly, a lack of knowledge on their pivot there. So I will read up. Next call, I'll have something intelligent.
Yeah, I want to say this. This is sort of a parting thought. This is my parting thought. Anybody else can add their parting thought. So as I look back over this last week, and I saw that many of the big platforms either talked about or actually did delist the president of the United States and many of his supporters from their platform, right? It got me thinking to the Facebook hearings, right? Or the hearings that we saw with Facebook and Google and Twitter, in which members of Congress were just apoplectic about what they were doing, and they were flapping their wings up and down, in disgust for what these companies did. But then they turned around and literally did absolutely nothing, right? And I've been thinking about that, and I was like, well, why not? Because they seemed so upset about these organizations, but they literally posed no legislation. And then after the events of this week, it occurred to me that these tech giants have a tremendous amount of influence and control over these politicians.
They have immense.
Yeah, all they need
and
to do is
they also shot themselves in the foot by not getting rid of Rule 217.
Well, hang tight. So
sorry, go ahead.
All they have to do is change the algorithm slightly, and that whatever politician, Senator Joe Blow, right? All of a sudden now in the search results, only the negative stories come up about him and not the positive, and that holds true for every member of Congress. So now what government entity or agency, right, that essentially is led by some high-ranking person is going to want to stand up or face a scrutiny, or essentially be under attack. And so when many of them, and again, this is not an issue of politics. To me, it's an issue of governance and freedom. So when many people said, hey, when the Trump supporters basically were saying that they felt that they were being silenced on some channels, they then went to Parler, right? And then the big tech giants essentially delisted all of them, and then AWS basically shut them down. And I'm asking myself, what's happening? And then I heard somebody on a talk show the other night said the next step that they're going to take, in addition to controlling speech, is to control their money, right? To essentially defund and make it so that their money is controlled. Now, whether you like them or not, whether you agree with them or not, the question is, when we have big tech companies that have that kind of power and influence, right? And I do believe that information and money essentially are really two, and the military, right? Those are the three arms of control. I believe that we have a responsibility to work towards systems and solutions that have integrity, that are rules-based, right? That distribute, decentralize the collection of power, so that we don't have a small group of people with literally more power than the president and leaders of major countries.
But keep in mind that those are also social platforms, like a newspaper. It's a private platform. They can kick anyone off they want to.
Totally agree. I'm not disputing that at all, right? Absolutely. They're
AWS is different. That's server core.
Listen,
and that was the scary part when AWS actually shut Parler off their service entirely and basically restricted their ability to do business. I mean, I understand the Facebook and the Twitter and what have you saying, okay, this is our place where you can post, we let you post for free, so we have control. Unfortunately, I understand that, but AWS ripping a contract away for essentially no reason. and
Well, no,
putting
they
someone
do
on
have
this-
clauses in their contract. I'm not supporting them, but I recognize when I sign up for a newspaper or for Google or pick your party, sorry, your social platform party, not you know, party. Anyway, so when you sign up, they have rules written ahead of time that say you must promise to follow these rules, A, B, and C. Now it is up to them to interpret, you know, when I say kill the president, is that sarcasm, humor, First Amendment, or does he really mean it? Agreed. There's judgment, but they are following the SLA,
I'm speaking about Amazon Web Services shutting down Parler themselves. This had nothing to do with Amazon Web Services is not a newspaper provider. They're not.
No, but they still have an SLA.
They're providing.
They're not doing it arbitrarily.
Guys, let me pause for a second, right? The point that I'm making, because this could devolve into a somewhat of a political discussion, right? The point that I'm making is whether you agree with them or disagree with them, right? I think the reality is we have a tremendous amount of power concentrated into a very small number of entities, right? And one of the things that blockchain allows us to do is to move towards a world where we can decentralize, and that's my call, right? We have a meeting scheduled on the 20th with the NATPA, right, the International Association of Trusted Blockchain Applications, right? We're going to be talking about hosting a conference of standards bodies and associations globally that are really focusing on decentralized governance. But I really believe that we are at a time where we could be moving towards an entirely new system of governance. You know, we had socialism and capitalism and communism, but we potentially, feudalism, whatever, we could be moving into a world where literally giant tech companies, right, could have an incredible amount of power and essentially become the new governance. And I believe that if we do want decentralized, if we do want a different governance model, if we don't want to be controlled by a small number of companies, right, regardless of whether you agree with them or disagree with them, I think we're moving into a very, very dangerous time. And so anyway, that's my call to action, is that we work together.
I agree with you entirely.
So anyway, listen, guys, it has been an absolute pleasure, a blast. If you're not GBA members, I hope you all join, because we just want you all to stay with the party. But we continue to do these free events and hope that everybody who attends they got a lot out of it. They got all their questions answered. They met other people. And if there's anything we can do to support you guys, please let us know. And I'd like to thank Joshua. Thank you so much for joining and be a part of this. Jorg, it's always a pleasure to hear you speak. And Ksenia, God bless you. I'm so grateful that you're well and survived the earthquake and everything like that. And for all those that joined and added to this, thank you so much for your participation.